We got a Halloween hit, but at least it wasn't a smackdown. What happened with gold and silver in late trading today? I'll tell you as we explore. That's right, the markets got spooked, that's for sure, but it was not a complete smackdown like what you have been seeing the past couple of weeks. Gold and silver are down, and so are platinum and palladium, but rhodium is actually up. Before I get too much into what has going on with the metals markets, let me remind you, channel sponsor Summit Metals, a great company to work with. They've got excellent customer service and fast shipping, so check them out by clicking on the link in the description of this video. It's an amazing thing that we're seeing with gold and silver actually holding on fairly decently. Gold hanging on to that $4,000 an ounce. It's just below that right now. It's about 0.65% down in moments before the markets closed, down $26.30 to $3,999.30. Silver is down 0.86%, down 42 cents today to $48.54. Platinum is down over 2% and took a pretty big hit, down $33, palladium down 9, and rhodium is actually up 1.27%, up $100 to $8,550. But this all happened as the markets got spooked in the afternoon trading. Gold did reach $4,045 an ounce. Silver was pushing $49.50 earlier in the day, but then they got scared. I'm going to be referencing a piece here from Gitco about gold, but we can translate it to silver, maybe even more so, as it's consolidating around $4,000 an ounce for gold. Despite continued selling pressure, gold appears to be getting comfortable around the $4,000 an ounce level as markets wait for more clarity surrounding U.S. monetary policy. The Federal Reserve did cut interest rates by 25 basis points, meeting market expectations, but the Federal Reserve Chair Jerome Powell created some doubt regarding the path of the central bank's renewed easing cycle, saying that a third consecutive rate cut in December was not a foregone conclusion. Ahead of Wednesday's rate cut, markets were pricing in a 90% chance of a rate cut. But now, and if I look at it right now, we can see that it is now at 65%. It was 63% moments ago, but it is now etched up a little bit here. But it's pretty amazing to see how quickly it had moved. Yesterday, it was after the announcement was made, that had averaged around 72%. So that's what we're looking at here. The markets are getting a little bit spooked here today, and of course an appropriate time for that to happen as it is Halloween. And so this is something. So the surprise hawkish comments kept gold prices near the weekly lows around $3,900 an ounce. At the same time, easing trade tensions between China and the U.S. could dull gold's luster as a safe haven asset, and silver too, at least for the short term. But remember, silver is trading well above $45 an ounce. In fact, the lowest it got during this consolidation period, the time when it got hit and smacked down hard, was $45.50, I believe. But it is now well above $48, $48.50 to be exact. That's pretty good, I would say. If we end the weekend there, if we end the week there at above $48, we're doing good. We can declare victory, especially for silver, especially considering that overall, the ratio between the two metals has narrowed to below 83. It's at 82.56 right now. Again, that's pretty good, I would say. And so Philip Stribel, chief market strategist at Blue Line Futures, said gold has room to move higher in the near term. However, he added that prices need to push above $4,175 an ounce to regain bullish momentum. So yes, and I do agree with that. That's going to be a struggle. And silver obviously would need to get above $50 an ounce to regain bullish momentum, and maybe even $51. But still, $50 is a very strong psychological number. And today we got close to it. It's about 60 cents off from it, from the high today. But still, that is a very good, strong indicator that we very well are within spitting distance of $50 yet again. So in other words, the high that we saw here going back above $50 to $54.50, which was the high for silver, it looks like that's not just a flash in the pan, although from 51 to 54 probably was. But if we can consolidate around 50, we're doing really good for silver, and that could build up for its next move to the upside. Now, the limited data next week could show further weakness in the labor market, so I expect, despite what Powell said, the Fed will have to continue cutting rates, according to the Philip Schreibel. Weak data should provide a decent tailwind for gold. Prices have had their correction and are now looking to find their way back up. Ole Hansen, head of commodity strategy at Saxo Bank, said that despite the selling pressure, gold's long-term potential remains intact. However, he expects prices to continue consolidating. Many organizations and banks are revising their short-term forecast, but that's just it. It's short-term. It's not their long forecasts remain in play for the most part. And considering the last consolidation period lasted 4 months, a return to a record high before the end of the year would be truly remarkable. Powell, just like everybody else, is flying blind, so he is urging a bit of caution. The U.S.-China trade deal was a nothing burger, solving none of the major issues, so with that in mind, I think patience is the focus for now. A weekly close above $4,000 looks pretty good and may help improve the tone next week. Of course, right now it's falling back a little bit more. It's at $3,998.40, so it's going to maybe tough to close above that, but even near there is pretty good. Now gold's holding steady, and with the U.S.-China tariff truce, are both pulling the rug out from under safe haven buying, while a jittery volatility index at 16 plus keeps diversification money trickling in. I'm still bullish longer term. Central bank buying and portfolio hedging will win out. So dips below $3,950 for gold are buys, and probably the same thing could be said about silver below $48 an ounce. Lukman Otonuga, senior market strategist at FXTM, said that although gold continues to tread water in the near term, U.S. geopolitical uncertainty, as the government remains unable to pass new funding legislation, could provide some safe haven support for gold, and that is something we should think about too. Domestic politics plays a role just as much as geopolitics, maybe even more so, depending on the issue. So that is something that we should consider here. And so we see that the price is down, the technicals around about 8% from all-time highs, but still ending the month 4% higher. Gold remains pulled and tugged by conflicting fundamental forces, but prices are bearish on the daily charts. Resistance can be found at $4,050 and support at $4,000. Of course, we're below that. It is trying to get back up to $4,000 right now, but we may not close at $4,000. It's a dime short of it right now. That's how much it's fighting. If the government does not reopen next week, it would mark the longest shutdown on record. Some analysts have said that this shutdown, which has stretched for almost an entire month, could start to impact economic activity. If the government is unable to pass new funding legislation, by Saturday, funding will lapse for the Supplemental Nutritional Assistance Program, and also known as food stamps, impacting 1 in 8 Americans. Of course, as was pointed out by some, 1 in 8 Americans, it's hard to believe that many people are reliant on SNAP. It's just crazy to think about. That program needs to be overhauled. I don't think all those people need it. I think it's crazy. We spend way too much money on welfare programs, and even DOGE was not able to really fully get in there and entrench to find out what's going on there. But that just is nuts. Well over 30 million Americans, and about 40 some odd million Americans are on it. And so that's crazy. So nonetheless, there's where we're at. A lot of these numbers will not be coming out, but we'll see what other private sector employment numbers from payroll processor ADP. Those are some numbers we're going to look forward to, and other private data that will come out from other institutions and organizations and maybe universities. So we'll see. So what we're going to look up for next week is ISM Manufacturing PMI. And then Wednesday, the ADP Employment and ISM Manufacturing Survey. And then Thursday will be the Bank of England's monetary policy meeting. And then consumer sentiment from the University of Michigan will come back a week from today. So there it is. Let me know what your thoughts are about what's going on in the precious metal markets. But I think that we can declare victory for both gold and silver through the weekend, as it didn't fall as much as some had expected they would. So we'll see. But let me know what your thoughts are. I'd like to extend a multitude of gratitude to each and every one of you for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.